Ladies and gentlemen, Greg Mikulowski from ForexLive.com. I'm going to take a look at some of the Forex major currency pairs here after that 30-year auction, which was not received well by both domestic and international investors. That is the third auction in a row, as a matter of fact, where the tail was much higher than the WI level at the time of the auction, indicative of not good demand from both domestic and international investors. So we're seeing yields move higher. The 10-year is now up around 12.7 basis points. The 30-year is up 1.43 basis points. The stocks are getting hit with the S&P index now down around 1.09% on the day and getting worse. So let's take a look at what the dollar is doing as it pushes to the upside on the higher yields. We'll start by taking a look at the euro versus US dollar on the hourly chart, and this move to the downside has been fairly orderly from a technical perspective. We had the CPI data come out, and that pushed the price below the 100-hour moving average. The blue line in this chart tilting the bias more to the downside. Note here how the low price here came in at the 38.2% retracement of the move down from the mid-September high down to the low. That level came in at 1.05709. We had the corrective move up to the 100-hour moving average then, and this was the opportunity for sellers to lean into the 100-hour moving average, and indeed they pushed the price down to the 200-hour moving average. Now with the auction results coming out pretty nasty, we saw the break below the 200-hour moving average, and has pushed the price down to another target level near the 1.05316 level. That level corresponds with a swing high here and some swing lows and highs through this period or this area right through here, right here, the support here, the support here. So we moved above and below the level before moving to the upside through here. Now we're back down testing that level, move below that level, and opens the door for a move down toward the 104.83 to the 105-ish type area down here, where again we have a number of different swing lows and swing highs ahead of the extreme for the month of October, which moved all the way down to 104.48. So right now, risk is now the move back above the 200-hour moving average. As long as the price can remain below that level, the sellers remain more in control. Let's take a look at the dollar versus yen, and this is the hourly chart. And this currency pair continues to move higher, maybe a little less of a rotation higher over the last hour or so, and I'll attribute that to the fact that this pair is getting closer to the 105 level. That 105 level, if you recall from last week, was broken right here. This was when the JOLTS job data came out. Market price moved up to 150.15, and then we had a 280 pip or so move to the downside in a matter of a minute on fears that the Bank of Japan would intervene. There was really no confirmation of that, but the market certainly was scared enough to push the price down 280 pips in minutes, or less than a minute actually. So as we get closer to the 150 level, we could see continued apprehension from traders to extend further to the upside for that fear of intervention and rotation to the downside. So be aware of that. On the downside, however, the buyers still remain in control above this area right through here, where we have a bunch of different swing lows and swing highs that came in between the 149.47 and 149.54 in trading here today. We initially found resistance against that level, broke above it, and then based against it here before moving to the upside. So it's a real level that if we stay above, it's more bullish. If we move below, then we could see further selling in this currency pair. Let's take a look at the sterling versus US dollar next. And like the euro versus US dollar, we are breaking below its 200-hour moving average. That's a green line in this chart. Comes in at 121.91. Next target area comes down here between the 121.59 to 67 level. That level corresponds with the number of different swing lows and swing highs going back in time through here. I'm not doing a real good job of outlining these levels, but you can see the point here where just clearly either the market moved higher or lower off of these levels, and the last time it was moved to the upside. So that down here between 121.59 to 67 is the next target. The close risk is the 121.91 level. That's the 200-hour moving average. More conservative risk might be up here near the 122.19 level up to the 122.31, but sellers remain in control in the sterling versus US dollar. Let's take a look at the dollar versus Canada next, and here we are on the hourly chart. We are breaking away from the 200-hour moving average. That's a green line in this chart. That's pushing the price to the upside, and in the process, we're extending above this level at 1 136.94. If we get and stay above that level, or we are above that level, but if we stay above that level, we should see some further momentum up toward this area here between the 137.36 up to 137.43. It roughly corresponds with swing levels through here when the market was forming the top up here. It sort of looks like a shoulder, a head, and a shoulder here before we broke to the downside here. So we're getting above the neckline right here as currently, and looking back toward the highs here ahead of the peak high that we saw earlier this month up at the 137.84. So moving higher there. The thing about the dollar versus Canada, if you put it on the 4-hour chart, we had a nice base here in trading this week against the 200 and then 200 bar moving average, and then the 200 and 100 bar moving average here before we move to the upside on the CPI data. So we are, it was a nice little floor here that stalled the fall. Also, that was near the 50% retracement as well. So lots of support down in this area right through here held, and we pushed the price to the upside as a result in the dollar versus Canada. Finally, I'll take a look at the Aussie versus US dollar, and this currency pair is sharply to the downside. The New Zealand versus New Zealand dollar is look very similar. We are testing this swing low right here, which was what was at bottom before we moved to the upside here. So this is the next target ahead of the extreme down here. It's the 0.62849 level. 63.057 is being tested. Get below that level. Look toward the 62.84 level. What is the risk now? Risk for traders, or short-term risk, is this area right through here between the 0.6326 and 0.6331 level. That's where, if the price were to move above that level, maybe we see more buying to the upside in this currency pair. So the dollar getting hit hard here. Interest rates moving higher, stocks moving lower. Everything's in motion. My name is Greg Michaelowski. Good fortune with your trading. Bye-bye now.